am. We're reacting off of this area from the left. So therefore, we want to see a buildup in the market. And that buildup being from this area. So therefore, we induce buyers by taking out the high. Once we taken out this low, that gives us an indication that we have induced sellers, but buyers are not fully trapped because we still have liquidity at the lows here. So since we still have liquidity at the lows, we need to see some form of indication of early buyers getting induced into the market since we just trapped these buyers, but still buyer liquidity in this market. So we trade up, gunning for these highs. Let's see, more people as admit. So we take out these highs from the left after taking out these lows. Therefore, we have induced buyers into the market, causing that BOS. So in any case, in any scenario, we do not want to be buying from anywhere in these areas. If we look closely, look at how we created this buildup before we've taken out this high. We've reacted from this high, taking this internal point out, trap, and then once we induce sellers again here, the next point of liquidity here. So therefore, we don't want to involve ourselves in this price action. Also, this is what, London session. I don't advise trading indices during London session, just my opinion personally. So we trade for the highs, taking out this area, inducing buyers. So now we have a framework to work with. Why did we induce these buyers? Because this reaction now is coming from the lows. So now I drag out my lows because we've respected these lows essentially to move higher. Now we've built liquidity in the market to the lows. And once we've taken out this high, we have a framework to work with now. So we start to create a buildup by respecting this area, trading higher, price trades higher, respects it again. Okay. 1 second, guys. Sorry. 1 second, guys. Okay. So we respected this area and people to admit. So what I noticed here as well in the live market, because I was analyzing this and I took a short here and I took a loss because essentially I was too early in the market. So let's go over that before we actually go over into the next potential trade. So what I saw was this. Yeah, okay, this is the right price action. So we've taken this high out. And yeah, we have a build up to the downside. And I also have the framework of the lows at the left, the engineered liquidity to the downside. So therefore, I was okay with taking this short, but I didn't realize the risk that I was putting on in the moment as far as it being high risk since it took it out this low. So my entry was over here, waiting to see these highs go. We have a build up here. I forecasted this entry as well, but what I wanted to do was I wanted price to respect this low, then come to the high first, and then we trade lower. But that didn't happen. And since it didn't happen and we traded below this low, I knew that the trade became higher in risk, but I was still willing to take it. I was still willing to take it just because of the fact that I didn't want to miss the move. Now I know that that's not the right framework of thinking just because of it's rooted to FOMO. And in my opinion, when you really look at it from an objective standpoint, that's really just a FOMO way of looking at it. So if I know the trade's gonna, bring on higher in risk, then there's no reason to take it unless, I have the affordability to take it. I'm in profit on my accounts. There's not really any drawdown. I'm playing with house money essentially, but that's not the case. So therefore, shouldn't have taken a trade. So we respect the area and then we move away, building more liquidity at the low. So that was a valid loss for me. So then I look to the left and say, okay, what next can we take out to potentially fuel this move to the downside? And I see it right here. So the way that we see this very easily is we've just trained our eyes to see this by going over countless market conditions and price actions. So we've taken out this high to the left. And when you look at it, this whole area has essentially has essentially been reacting off of price. So notice how when I drag that area out, we have that reaction here, causing price to create this buildup of price action. And we also have a LB above. So we had that LB above. In my opinion, this is also another high risk entry just because of the fact that it's a direct entry in this case. In my opinion, I have most direct entries high risk just because I'm more of a conservative type of trader. I like to take more confirmation based entries. So in my data, personally, this would be a high risk entry. Valid though, nonetheless, because we have the build up to the downside now. We've trapped sellers by taking out this high. So let me mark that on for you guys. We've trapped those sellers by taking out that high. We're reacting off of this LB. So these entries, I would essentially use lower volume than normal. So we're in at 10:15 a.m. So that's also a great confluence too of the timing of the market that we're in at 10 a.m. So now we start to trade down. Let's go over the 1 minute price action. I also want to hide this. Let's do this real quick so it's not like in our way. Let's do a current interval only. Okay, cool. Because we need to go over that price action in there. Okay, so now we've reacted to this LB. Here is the potential price action that we're given. Um, can you hide stock list panel so we can have full screen? Oh, okay, yeah, sure. My bad. I haven't been looking at the chat. Of course, gold is definitely next, Danny. Gold is always going to be next. Okay, so after we tapped into there, we've induced sellers by taking out this low, and here is where we've taken out the low from. This inducement high here, and we also have a LB here. Now this, I would have liked price to come above here, so therefore I didn't involve myself in any confirmation entries, but valid for price to have a reaction at this area because it is a liquidity block and we've tapped into it. So here's what we do. We respect this low. Remember, I wasn't involving myself in this position because I would want a price above this low, I mean this high to take the entry stop loss above here. So therefore, I didn't involve myself in this piece of price action. But just to analyze it, here's what we get. We've taken out this low, still building liquidity by holding this low to the left, by the way. So we still haven't traded below the low yet. Price makes equals, perfect equals at the low. Then we have a buildup by respecting this area, coming to the low, respecting it again, taking it out. So what does that do? That forms an LB. But again, my confidence is not here to take this trade just because, again, I would want price above here. So therefore, we didn't get that. So price runs lower, takes out the lows. And then now here's a position I would have involved myself in. So we get another reaction after reacting from this low here to the left, inducing buyers. What we do here is before we take out this low, we've created an LB here. So now, where is the next point where I can see liquidity taken for me to take a sell? Here. Higher in risk just because we haven't taken out this high. Therefore, the trade is still valid, but essentially I would use lower volume on the trade. Covering that as my LB. And you have targets here. You also have these lows to the left as well. Let's mark that out. Where buyers are getting induced from that took out this high up here. Let's go over there. So you have these targets as well. And notice what price did afterward. So since we created a new LB with our entry, essentially, we created a new liquidity block with our entry. Price then runs for the next form of inducement high. So look at how we have that build up there, right? Before we taken out the low, that build up becomes our inducement high. Notice how the accuracy, price takes it out. This would have been a more lower risk in entry just because we've taken out this form of structure, therefore inducing sellers, and we've respected this area to the left. We're still in a bearish market environment because we've essentially trapped sellers above here. So now any reaction to the left should be an indication of buyers getting induced, which should be a false reaction. We want to see these reactions happen to essentially create a buildup to where we can find an area to sell from, like this scenario. So we take out the high, targeting the same lows, and price does the same exact thing as this scenario here. Comes for the inducement high. Sorry, guys. People need to be admitted. Comes for the inducement high. But this entry I would not take. Realistically, I'm not looking at the market at 4 a.m. to take, I mean, 4 p.m. to take an entry. That's too close to market close. You can't even take an entry at, you can't even hold an entry past 4:30 if I'm not mistaken on prop. So therefore, I wouldn't have taken this entry. But you see how price literally runs for that inducement high, respecting that liquidity block to trade lower to these lows. So now, after those sells, we had three potential sell opportunities, two high risk sell opportunities, one low risk sell opportunity. And then we take out these lows in crazy fashion. Look at how we take out these lows, but we still leave liquidity intact at the lows by leaving these lows intact. So therefore, let's clean this up a bit because I do not like my C charts at all. So if we're going here, I can also go over another loss that I've taken. Hopefully it helps you guys out because I know like when I go over my journal, it helps me out going over my losses. So we're in this piece of price action. I wake up and it's 8 o'clock. So I see that we've taken this high out. Therefore, I do not want to be looking for buys. Why do I not want to be looking for buys? Remember, we're still in that market environment where we're engineering liquidity at these lows. Therefore, there's no reason for me to be involving myself in invalid longs. So you notice how I said invalid. There's times where I say high risk. High risk, there is validity in those trades. It's just essentially lower probability. But essentially invalid trades is trades where I want to stay away from. So notice how what we do here is we come into this low before we take out this high. So essentially this area has been respected. We move away. So now I know we have liquidity at these lows, but I do not want to be looking for any long opportunities. So once this high was taken, I looked for a potential short, and I honestly took the aggressive short because I saw this as my LB. Again, I had the same framework that I had in the other loss. I just wanted to be in the entry to not miss the move because I was so confident in the direction. So you see, even I can make a mistake like that and take a premature entry just because of my essential emotions in the moment. So you notice how psychology is very important when it comes to, your decision making because the only reason I took this trade was basically FOMO. My lack of patience of saying, okay, let it come a little bit higher. Let it show me clear what's the word? Let it give me clarity, essentially. But in this scenario, I just wanted to see price come above the high and then just take the aggressive entry, not miss the move. And that's my fault. So that was a loss in my opinion. So after that, we trade up into this high. After respecting these lows, this low is a LB, but it's not a LB we want to be trading from. It's LB that should build liquidity. Remember, we've just induced buyers, therefore we do not want to be trading with this low. And we've also framed out a bearish direction. So we've taken out this high. And now the next trade I took that was a win was another aggressive entry as well. So if you look on the 15, it looks clear as day. You have a buildup at these highs. So as soon as these highs were taken, you take the sell. And we're going off of this high being our new LB. So pretty big stop, but who cares? We have clear direction, nice entry, and a 1 to 5 at the lows. I honestly thought this entry was not going to work out because it was kind of late. In my opinion, it tapped at 10:45. Normally, I get off the computer around 11:15, 11:30, 11:20. So I didn't think there would be any sort of volume like this to come in the market, but I was very lucky essentially that, that PM started to build some volume. So that was really why I am. Took two losses, took two wins, but you know, it was pretty in-depth price action. So now that we've taken out these lows, we've now induced sellers. Now I want to see YM to the upside because essentially we have followed the framework that we were looking for after reacting from this high. So therefore, we've gotten that build up. We've induced sellers off the reaction from this high. Now I want to see price trade above here. So that's YM. Let's go to gold. Let's go to gold. Gold. A lot of people probably got tripped up on this price action. It was a little bit tricky, but at the same time, you have to be patient and sit on your hands when you're not very clear on what the data is showing you. So let's go on a daily actually. So we've taken out these areas from the left, inducing buyers. Therefore, I do not want to be buying at these lows. So that already gave me a framework to wait for price to come below these lows to look for any sort of longs. So now I'm in a framework of looking for some shorts. So let's go over this price action because this was a little complex. So we've taken out this low here, inducing sellers. But let's actually put this here. We've had this gap. So notice that we've been having these frequent gaps after market open on the weekend and price comes to feel it and does something totally different than what we expect. So a lot of people could have framed out a bullish bias, seeing price back to this high, but essentially we have no engineered liquidity to the highs yet. But what we do have is what is price respecting in this moment? Why did price continue higher? We have these lows to the left. So let's also frame this out here. What caused us to take out this high? Where were buyers being induced from? This low here. So when you frame that out, you also have this whole area that price reacted to, for one, to cause price to go higher. And then we had a buildup at this area as well. Notice how we had a buildup there. So that also caused price to respect retail, go higher. So therefore, I do not want to be buying from anywhere in these lows. This right here is your inducement low. This right here is your inducement from the left, because this is essentially where buyers were originally induced from. So we take out the low, but we still tap into this area. So now let's go over this price action on a more intraday time frame. Okay, so once we tap into these areas, this is just uncharted territory where you do not want to be involved in. We just take out this gap. We fill it by inducing buyers. No valid trades for me in these scenarios. Okay. We trade lower, taking out this low, respecting this area, and then moving higher again. Nothing in this area that's valid yet. So what we do is we take out these lows. Notice how we have a LB here. I think a lot of people wanted to buy from here, but you have to remember that we're reacting off of that inducement from the left, essentially, and there's no engineered liquidity at the highs. So currently we have engineered liquidity at the lows, but not at the highs. So therefore, you're playing into retail by buying this. So we get this reaction after reacting off of this LB. And notice what we have above. We have a buildup. So notice how we have that sell off here. Price reacts to it. Let's refine that. Let's make that look better. And then price comes and takes that area out. So now we have an indication of buyers getting induced after reacting from this area to the left. Therefore, that lets you know that we do not want to be buying from these lows. We've just built liquidity at these lows. So now, how can we get ourselves involved in short positions? So after we've taken out this highs, at these highs, we have a pretty aggressive sell-off, but we are still trading in this low. So we still have respected these lows to the left. So therefore, we could find something that can potentially give us a sell, but we don't get the inducement high taken out yet. So price just trades above this high and then shorts off. So what do we do when we take out these lows? We induce sellers. And now we give ourselves a new inducement high. Notice how we react from this area. We reacted from that area and we shorted off, and we never taken out this inducement high here. So since we've never taken it out, we left that intact and we've reacted from this area, building more liquidity at this high. Once this low was taken, we look for this high to get taken. LB above. This was the short that I took on Tuesday. You can see it in the mentors charts as well, if you want proof. So essentially, why did we induce buyers? Since we've taken out this low, buyers are looking to buy this thing because we're still in the framework of this, essentially. We're still in the framework of this, that BOS into the market. We've just saw a low get taken, but buyers are still buying this. This is still buyer liquidity in this market territory. So therefore, you can just drag out the extreme is what price is reacting off of. Target these lows. Boom. So that was the trade on Tuesday. Honestly, I wasn't greedy enough to hold it to these lows. I wish I did, for more profit, but who cares at the end of the day? Would have been, what would it have been? A 1 to 12, but damn, that actually would have been nice. But 1 to 8 is also fine, We're in a business of making money, not being right all the time. So now, once we've taken out these lows, gold, I still see potential downside. So what we do here is we trade above the highs. So now that we've traded above the highs, we induce buyers here. So now what we are doing, let's call it BOS. We're reacting from this LB area now. But I don't want to take a direct entry off of this LB because realistically, I don't have any clarity that we'd short off from there. So what I would need to do is break down price. And here's what we can see from that. So after we've taken out this high, we've built liquidity at this inducement low. Notice how we respected it, moved away, respected it again. Price respects this area here, takes out this high. So now what we do is we trade at the lows. Let's go to the 5. We trade at the lows now, respecting this area, causing price to trade up, respect here, and then we short off. So now what price does after we take out the low, essentially, price, I would have wanted to see price above here, truth be told, but we didn't get that. So all price did was take out this and then trade lower, and then price respected this. I honestly would have wanted to see price above here, take the short, cover my SL above here, and target the lows, but we did not get that. So unfortunately, gold ran without us. That was history. So we short off here by taking out these lows. We've taken out these lows here. And notice what we do before we take out the lows. Build liquidity. So although we don't have any form of valid entry, we can see and we can follow price by tracking liquidity. Every time we get these reactions, we're inducing buyers to trap sellers, and then we move to the downside, all because we've induced buyers here. Therefore, all the reactions to the left, these essentially these areas that buyers want to be buying from should be false reactions. So what we do here is we create an inducement high. So now that we create an inducement high, we also have a LB above. Here's a potential entry you could have taken. So as soon as this high was taken, you look for a short, covering this. Higher risk because remember we didn't take out this area, but that's fine. We have a LB, inducement high, and look at this. We've reacted off of an area buyers want to be buying from, which causes us to induce buyers. So easy partial point there. You can also target these lows. But truth be told, most of us would go break even after taking out these lows. So therefore, would possibly be taking out break even here. Me personally, I would be taking out break even because I'm not holding a trade and getting taken out after not taking any sort of partials. And that's a 3 to 4. So that's definitely where I'd take partials at. So we've been taking out break even. Price runs this high, still reacts from the area to the left, and then we short off. No possible short that I'd be involved in. This price reacted off of here. This whole area created this inducement high after taking out the low. Notice how we have this build up at the low. So therefore, we induce sellers. What can we react off next to induce buyers? This area here. So price reacts off this area. We have that inducement high. We have that LB, potential short into the lows. These two entries, high risk in my opinion, because I would have wanted to see price above here to take a short, but we never got that. But if you follow price and you track liquidity, you're able to frame out an entry that I would potentially recommend using lower volume on, still valid to the system, but again, essentially higher in risk. So we taken out the lows, inducing buyers. I mean, inducing sellers, I'm sorry. Taking out the lows, inducing sellers. So now buyers are trapped. What we do here now is we induce buyers again. Not an area I'd be taking a sell off from. We then take out the lows. This is Asia. We're not trading Asia. So now what we get here is price reacting off of this high. And then we induce sellers. So we induce sellers, taking out this inducement low as well. Let's mark that off. Notice how this area induced buyers. Therefore, buyers want to be buying from this. And you have a liquidity block below, and you have engineered liquidity here because we essentially respected this area, moved away. So if you could have potentially taken this entry in London, only reason why buys would have been viable. Sorry about that. Where is it? We've taken out this low to the left. So therefore, we can see a move back up. We have all this liquidity to the upside. So we need to essentially see sellers trap before we have another potential sell-off. So entry there. I would be possibly targeting this high as well as this is an intraday target here.